Affordable Care Act is not just changing health coverage.
It's also changing the tax code. Local 12 Sheila Gray has what you need to know about health care reform and your taxes in tonight's Family 411 report.
The Affordable Care Act remains a hot-button issue in the U.S., and it's rearing its head as Americans prepare their tax returns. Two new taxes and a big change in medical deductions are surprising some filers who didn't plan ahead.
Deducting medical and dental bills is harder this year. In the past, filers have been able to take the deduction if it totals 7.5% of their income. But now those bills have to total 10% for Americans younger than 65.
I think that it is a way to help pay for the additional cost of the Affordable Care Act, and it's a way for people to take fewer deductions and so a few more taxes going to the government.
Americans who make more than $200,000 a year or a married couple making $250,000 also have to pay a new 3.8% unearned income tax.
Because it's not money we earn by working, it's through interest, dividends, capital gains, rents, things like that.
There's also a new Medicare payroll tax, also for those income levels. If you only hit the total as a married couple filing jointly, make sure you're setting aside the extra 0.9%.
You could have a big surprise.
The government also placed new limits on flexible spending accounts last year to push health spending accounts for high-deductible medical plans. Americans who choose an HSA never have to pay taxes on the money, and unlike a flex plan, it rolls over from year to year.
Tax experts say if you got one of these surprises, it's not too late to plan for next year. You can start saving for your 2014 return, or you can reduce your taxable income with one of those HSAs or your 401k at work. I'm Sheila Gray reporting.
There are also more changes on the way this year. With new information on your W-2, penalties begin for people without medical coverage. But low-income filers who can afford it may be eligible for tax credits.